You spent a lot of time in Asia. Talk a little bit about those experiences and how they impacted you and how you became an investor.
You really need to understand not just what's happening with your company, but what's happening with other companies globally. And so it really developed kind of that global perspective. I'm really not as interested in the next quarter earnings or even 2 quarters. I'm much more focused on where is a company going over the next 3 to 5 years or the next 5 to 10 years? Where is the industry going? How are consumers changing? How are they innovating?
If I had to sum up your advice to folks who are looking to get into this industry.
The best thing to do is to...
Today, we're joined by Noriko Chen. Noriko's an equity portfolio manager based in San Francisco. She's been at Capital Group 26 years. She's also on our Capital Group Management Committee, helping to oversee the company. And welcome, Noriko. Thank you for being here.
Oh, it's a pleasure to be here.
So I'm going to ask you a strange question to start off, but what's your favorite ice cream? What's your favorite flavor?
Chip.
Mint
Easy.
chocolate chip.
Easy.
All right. I'm a coffee ice cream guy. My wife, Chris Ann, loves chocolate. But I am going to ask you about an ice cream company because I think it may have been one of your first investments. So talk a little bit about one of your first investments, and then we'll dial back to the beginning.
Okay. Well, the context is I went to Williams College, and we're situated on the northwest kind of border of Vermont. I ate a lot. I love ice cream, and I ate a lot of Ben & Jerry's ice cream. My father had taught me to invest in things you know. So I figured, okay, I love ice cream. A lot of my friends around me were also eating Ben & Jerry's ice cream. And so it must be a pretty good investment. I did some cursory work on it. I thought the annual report was fantastic because it was basically back then, you could get physical annual reports. It was a coloring book, and it came with crayons. I was like, free crayons.
Wonderful.
I know.
So about what year is this?
So this is in 1985, 86.
Okay.
And I invested in the company. It didn't turn out that well over the longer term period of time because I think the founders were more philanthropists than more profit focused, and they had pay caps for their senior management team, so couldn't really get good managers to come into the company.
Yeah.
Yes, to retain them. So that didn't work out.
Right. That was 40 years ago, but it still sticks with you.
So there were a few other investments that I made when I was in college. One was in Intel, which actually was pretty good. Another company that didn't work out was a local bank. What I didn't realize was that it was a savings and loan. Right. And when I was in college, there was a huge savings and loan crisis. And I think in Massachusetts alone, about 250 savings and loans, S&Ls, went bankrupt, including the one that I owned.
You're going to have a lot of listeners and viewers Googling the savings and loan crisis.
I know. I'm sure some
because not everyone knows.
Have not even heard of an S&L crisis.
What about your investment edge? When you think of yours, what would you say it is?
Yeah, so I think my investment edge is my global perspective. So it's my background, it's the different places that I've lived, and the fact that I like to think strategically. So for me, I'm really not as interested in the next quarter earnings or even 2 quarters. I'm much more focused on where is a company going over the next 3 to 5 years or the next 5 to 10 years? Where is the industry going? How are consumers changing? How are they innovating? And that's why I really like to work with our clusters. But the clusters are teams of analysts and portfolio managers that will do deep dives in a particular sector. For example, when I was in the energy cluster in the early 2000s, we identified that China was going to be an incremental, driver of demand. So in the early 2000s, China was about 5 million barrels a day of demand. And basically, they went to about 10 million barrels by 2010. So, within a decade, they doubled demand. It's not that easy, especially back then, for the world to increase supply that
Wasn't
quickly.
that elastic?
Right. It's because, especially back then, it was mainly offshore oil and gas, takes 7 years to develop. Oil prices went from $20 to $130, before you had that response of particularly shale oil from the U.S. It's those types of, I think, working with teams and collaborating where you have kind of 1 + 1 = 4 that I really, really think that benefits are my portfolios, and I hope benefits our shareholders. And it's really that kind of work that I enjoy doing.
You spent a lot of time in Asia. You spent a handful of years in Japan, nearly 20 years in Hong Kong. Talk a little bit about those experiences and how they impacted you and how you became an investor and how you're an investor today.
Right. So I'm Japanese American, born in the U.S., grew up on Long Island, but I took Japanese classes every Saturday and then went back to Japan every summer. So I feel very comfortable in Asia and speak Japanese. Now, when I started working at Capital and the Hong Kong office, when I first joined, Rob Lovelace was my research director. And he asked me, what would you like to cover? Building materials or banks? And I said, what about technology? And he said, building materials or banks? And I said,
Let me go back to the first question, building materials or banks.
So I said, okay, I'll do building materials and infrastructure. And it got me all around Asia. So including, China, Thailand, Indonesia, India, Vietnam, Japan. And then I ended up covering energy after that. But it was, and with the energy coverage, also, I spent time with our analysts in Brazil looking at pre-salt. We spent time in Texas with the companies in Houston. And so, you really develop a global perspective of what's happening in an industry. So you really need to understand not just what's happening with your company, but what's happening with other companies globally to understand, especially something like a sector like oil and gas. And so it really developed kind of that global perspective. But then I also started to understand kind of the nuances between management teams. So, why do some management teams prioritize different things? Like, after the war in Japan, the management teams were not prioritizing, profitability. They were prioritizing kind of making sure the population had jobs. And that was the same after, kind of during the crisis, the financial, recession in Japan. But you have different, management teams prioritizing different things, and you kind of get to understand that over time.
I love when our investment professionals talk about companies. That's one of our differentiators. We end up knowing company managements better than anyone. And it is that unique access that differentiates us most of the time. Talk to us about some of your trips. I know you, and we joke about it, but you travel a lot. I think you travel more than I travel, and I think I travel too much. So you travel a ton. For our listeners, I will ask you to describe this behind us, Noriko.
Yeah.
So this is you on a trip. And can you please just describe the picture of what we're looking at and how this research was an important one, this trip?
Yeah, so this is a trip that I took with Jackson, who's one of our analysts in Hong Kong, I think probably in about 2018 or so. And the goal of that trip was to effectively look at a lot of smaller automation companies in China and to see if, how competitive these companies were. Were they going to be able to compete with some of the Japanese companies over time? And what were they doing in terms of innovation? And what was interesting was that you were already seeing kind of the early,
that was a big robot,
of humanoid robots,
Yeah.
which is kind of what we're hearing about today, 7 years later. But these trips are, these deep dives are, I think, incredibly impactful to our investment process. They help us understand kind of where companies are going, where industries might evolve, who is going to be gaining market share, who has technology. And I think, so again, like this was 7 years ago. Now we're hearing a lot about humanoid robots, and I think we're hearing about it because AI is also improving, the ability, the quality of the robots, and we're starting to see prices come down. So if you can get, robots and cobots for about $5,000, then all of a sudden they become a lot more commercial. we were talking with one of our restaurant analysts, and he was saying that, if a restaurant can use, basically labor is about 30% of sales for a restaurant. So if you can use a robot, then, it could cut costs down by about 10 to 30%. And that could add anywhere from, kind of 3 to 10% of margin. On a 15% operating margin business, it's a lot of leverage.
That's if the cost of getting in is not so high.
Right, exactly. So, and so when I was in Japan recently, I just sent off an email to our industrial cluster. And when I was in Japan, I saw a lot of robots in restaurants. So you're already starting to see kind of the commercial use of these robots. And I think it's just the beginning. This is great for aging societies. I worry a little bit that this is also, will take jobs from other workers.
And are there other trips that stand out in your mind that you think were super helpful to your process? Again, I know analysts and portfolio managers do hundreds of a year. So obviously for you, it's been thousands over the last 25 years. But are there other ones that stand out?
We just did one 3 weeks ago. We were in Beijing, and there were 5 teams covering 5 different deep dives on 5 different sectors. So you had I was on the energy team. We did industrials, financials, consumer, and maybe 2 consumer teams. But my team that did the deep dive on energy, really came away with a lot of interesting kind of perspectives. So we see the companies, we saw a lot of state-owned companies, we saw some economists, and what we came away with is, up until now, China has basically been one of the big drivers of basically energy consumption globally. And it's quite clear that at least for transportation demand, they've peaked, or are very close to peaking. And so if China over time, their energy requirements come down, especially with the proliferation of EVs, and that's part of it, then that actually might have a big impact on kind of the entire energy cluster. Like we just may not need as much, oil and gas in the future, which has ramifications for companies, prices, and could be good for users.
But that kind of information is more about the global investment environment than necessarily owning this or that Chinese company. Is that right?
It's for that we saw everybody. So we saw the chain. So we also saw some of the petrochemicals companies. So, users of energy, if energy prices fall, could benefit. And we also saw the distributors.
So the whole ecosystem.
So we're seeing the whole ecosystem, and there are definitely companies that benefit. We did also see some of the EV companies. And we even took a tour in one of the autonomous EV models when we were in Beijing. And, you can see that there are some companies will definitely benefit from this trend.
And then let's move a little bit from one continent to another and look at Europe. There's a lot going on in Europe. And I think some of the fiscal stimulus we'll see from some of the tariffs will end up creating a bit of a European moment. And we're seeing that in defense. We're seeing that in infrastructure. What are you seeing in Europe? Are there things you're doing in your portfolio now for the next 5 to 10 years because of what's happening that are interesting to you, or are there not? Are you not seeing that kind of dramatic shift?
From a global investor perspective, I think Europe hasn't been as interesting in the last kind of 5 to 10 years. Europe hasn't had kind of the dynamic, tech companies that the U.S. or even Asia has had. So when you look at the composition of MSCI Europe, it's probably like 15% financials, 15% kind of industrials, and then you have some of the pharmaceutical companies. So you really don't have tech. Tech is like 10%, of the index. So because you don't have the growth component, it hasn't been as interesting. Now, recently, I would say within the past 3 years, it has become more interesting because there's been a lot of restructuring. So you have, and our financials analyst, Matteo, has really, he was the one pounding the table a couple of years ago saying, hey, for example, in the bank sector, you had, because of regulation, the banks had to basically build up a lot of capital. They weren't allowed to dividend,
Overcapitalized,
so they're
low
kind of
growth,
overcapitalized, low growth.
low
And then
PE.
they also, decided they brought in good management teams. They basically shrank their footprint. So we don't need to be in 45 countries. Maybe we're in 25. Let's prioritize the business. And it's hard for CEOs to shrink, right? But then they've done that, and they've grown their profitability. And now you've had banks who were effectively trading at price to books of about 0.4 times. Like if you think of an average bank trading at about 1 time, so good U.S. banks like a J.P. Morgan can be about 2 times. So these were 0.4 times
They're
price to
super
book.
cheap. Yeah.
Super cheap. And now they're 0.8. So we've had pretty attractive capital appreciation. And, even today, Matteo and also William, our Asian banks analysts, believe that there's, potential for the banks in both Europe and Asia to continue to improve their operations, their assets, and also improve kind of their return profile.
And can you get them on the same level as the best-in-class banks in the U.S.? Will you see a point in Japan and in Europe where the multiples are nearly identical, or is there going to be this persistent X% discount based on the geography they're in?
I think geography is an issue. The U.S. is huge, right? So you really have a much larger geography, and the banks are also global. The European, structurally in Europe and also Asia to an extent, you just are limited by your borders. So unless you see a lot more consolidation across border, we probably won't see the kind of like the 2 times price to book, but you could get close. And there are some banks, including like a DBS bank in Singapore, that are incredibly well run.
So I like visiting our office in San Francisco, and I like visiting you there. So I was able to go in your office and take something off your wall. I do want to go into the office treasure hunt, because something on your wall, it's a New York Times article. It says mutual funds and ETFs. And the title, it's a picture of you. You look very nice in the picture. And it says $1 trillion puzzle.
Right.
So I'm going to ask you, I'll hold it, but I'm going to ask you to describe for folks what this article was about and why is it important to you.
Right. So it was really fun to do the article, but it was about why aren't there more women investors? And, the article actually featured several women investors. And I was surprised because I didn't realize that I was going to be on the
cover.
On the cover. My point in the article was that it's partially nurture.
Mm-hmm.
So, yes, we want our daughters to, become scientists and engineers and investors. But you also need to kind of raise them that way, and they have to learn how to be comfortable with taking risk and being wrong. An example of that is, when you watch kids playing sports, like I would go to watch my son playing basketball and soccer and watch my daughter doing the same thing. The boys when they're playing, they'll shoot from midfield. Like they'll be like, I can get it in, or 3-point shots from like, there's no way they're going to get it in. And you're usually like, maybe you should pass the ball. But
it's a little more aspirational.
Exactly.
Yeah.
But with the girls, they will wait until they're literally in front of the goal to shoot. Or, when they're playing basketball, they really want to make sure that the shot goes in. And I think that it's that mindset of, if you, like statistically, the more you shoot, the more you're going to get in. And if you don't shoot, you're not going to get it in.
Right.
So we need to teach, both girls and boys that, they just need to take a lot of shots and take some risk.
Take some risk.
Yeah. And so it's that nurturing. And then the parents need to be okay, and the educators, with them being wrong, right? And so I think nurture is one. And I think that coming into the industry, a lot of women and men now, over the past, I would say, decade, didn't necessarily want to go work for an investment bank, which is kind of like one of the on-ramps into finance and investing because of cultural issues. But I think today that's changed a lot. I was just talking to a mentee who's at one of the big investment banks in New York in their M&A group. And I asked her how she's doing, and she said she's doing great. Like, it's tough work, but she loves it.
Right. That's what she signed up for.
Yeah. And I think that, the more that everyone, all these students, they want rigorous work, but they also want to be in a environment where that's culturally, constructive and positive. And I think that we're seeing that. So I think that's positive. So I do believe that it's going to change, and I think that it's already changing. I think we're going to see more diversity, more women, and diverse candidates coming into the field.
And you do a lot of recruiting for us at Capital Group. What are you seeing in that role? Are you finding that diverse talent? Are you finding opportunities? What are you seeing?
First of all, we have 3 main pipelines. So one is undergrad, one is MBA grad, and then lateral hires. And I would say all 3 pipelines are very healthy. And we are going to have a big summer class this year, which we're super excited about. What I look for is basically candidates who I think are going to be good investors. I think we see a lot of good candidates, very smart people who could be good analysts. So, they can crunch the numbers, they can understand what a company does and what the sector does. But it's really that next step of being an investor. So having that analytical skill of identifying what's different about this company? What will this person do to kind of get that investment edge? And when I look at our analyst team, they're hungry. They want to figure it out, and they also like good deals. They want to be able to identify companies when they look attractive. Sometimes, periods like now when there's a lot of volatility. So I think that's, those are the types of candidates that we're looking for. And we're also looking for candidates that are resilient, that again, are okay being wrong, who are willing to take, measured risk. And so there are a lot of things that we look for, but generally.
But it's so important what you said, especially at Capital Group, where analysts are investors. They're not stock raters. They're not bond raters. They are literally investing real client assets, real money. And that's a different skill set, being an investor than being an analyst and telling people what to do.
That's right.
Talk a little bit about the difference of an analyst who tells people what to do, you should buy, you should sell, you should hold, versus an analyst who has skin in the game, who actually has conviction in their own portfolio.
Well, I think it's exactly like this kind of time period where, you have a lot of volatility in the markets. There's, share prices are kind of moving on a daily basis. And so everybody just takes a step back and says, okay, I've liked this company for a really long time. It's great. They're going to continue to gain market share. And, and before it was more expensive from a valuation perspective. Well, the fundamentals may have changed a little bit, but not much. And so one of our analysts, in fact, just a few weeks ago, said to me, you liked this company before, but you weren't willing to buy it because it was too expensive. She's like, now it needs to be on your radar screen.
It's got a lot cheaper.
Yeah. Right. So it's that. It's really, understanding that fundamentals are strong, but now you also have, more attractive valuations. Maybe there's some downside, right? But we're never going to call the bottom of a cycle. So, and buying and selling for us, it's not just it's not just a point in time. We do it over, a cycle. So, we can start now and just keep adding to positions.
So is that, if I had to sum up your advice to folks who are looking to get into this industry, it seems like you're talking about entrepreneurship and passion and being willing to take risks. That's the kind of thing you're suggesting some folks to do who are contemplating our industry. Don't happen into it, but really own it and have that passion and have that drive to be different in how you do it.
Right, that's right. And I do a lot of mentoring for college students and for high school students, and so I recommend to them to read a lot. And there's so many great podcasts like yours, and they're, great investing books. So you can do all of that and you can start investing a little bit. And if you have no money, you can still do a paper portfolio.
Right.
So just kind of, just feel what it's like. Get involved and see what it's like and see when you're right and when you're wrong and why, and if your thesis is working. And so I think, the best thing to do is to just start trying.
So you are one of our best mentors at Capital Group. You mentor a ton of folks. Who was an excellent mentor for you?
So I've had many different mentors through the course of my career. And so when I started off in the beginning, I naturally gravitated to some of the younger PMs and senior analysts who were global, who were traveling a lot, had interesting perspectives. And so I would kind of piggyback on their trips and learn from them, PMs like Carl Kawaja and Jonathan Knowles and Rob Lovelace. Another fantastic mentor has been Darcy Capshaw. She has since retired, and actually we still communicate and are in touch. But Darcy was also, a research director. She was also one of my research directors, but a research director, a senior leader, an income leader at Capital, and she actually was the person who drove a lot of our focus on recruiting and just making sure that we were thinking about diverse hires too.
And she was one of the first women on management committee.
That's right.
As well.
Yeah. So a fabulous mentor. And I would say today, a lot of it's almost like reverse mentoring, but I learn a ton from our youngest analysts.
That's interesting.
We have lunch with our team every day when we're in the San Francisco office, if we're not in meetings or on calls. And
so you grab your lunch and you go
grab
sit
our
together.
Lunch. Yeah,
right.
we do it down and up. We grab our lunch, come in, and we're usually just asking the analysts all the time, like, what are you buying? Like, what are you watching? Where do you watch
behavior.
it? Yeah, it's behavior, and so they're always telling us all this stuff, and it's like, oh yeah, so we see like all of our cohorts, like a lot of our cohort are doing this or doing that or not buying this, and so. We learn a lot from this younger generation. It also ends up in some really funny conversations, including, we have one of my colleagues, a senior portfolio manager named Julian Abdi, but he's a huge Beatles fan, and we have this conversation about music and movies, and, a lot of the younger analysts were like, who are the Beatles?
Who are the Beatles? I got to...
Julian almost fell off his chair, but, times change. Analysts come from different countries and, have different backgrounds. And, so it's, fascinating.
Well, Julian's an upcoming podcast guest, so I'm going to ask him about some of these things and ask him about his passion around the Beatles. I want to get in this last segment a little bit about you personally. You do a lot of nonprofit work. You think about underserved kids. Tell us a little bit about your nonprofit work before we get into family and your gratitude.
Well, I believe that people are equal, but they are born under different circumstances and have different opportunity sets. So my goal is to kind of accelerate that balance. And, when I was in Hong Kong, I was one of the founding members of the Women's Foundation. And I usually start off with a philosophy of like, let's look at the numbers. Let's look at the data. Let's look at, what are the actual issues. So we actually had done a deep dive research report into the status of women and girls in Hong Kong. And then through that, from the findings, we ended up working with a lot of nonprofits and also doing our own programming. But when I was in Hong Kong at the end of last year, it was great because I saw a number of TWF members, and they have one of the largest mentoring programs in a big city. I mean, very impactful. So
you've seen people go through the program.
Yeah, and it continues to be a very, but they have multiple programs. That's one of them. They also have a girls tech program, which is also fantastic. In San Francisco, I'm on the advisory council for the Peninsula Bridge, which is a great nonprofit, education-oriented, and the Bay Area Women's Sports Initiative, which is also serving underserved young women. And, both are fantastic high-impact programs. For Peninsula Bridge, we have a number of our associates who actually teach an investment seminar to about a group of 20 high school students every summer. And that's always super fun because, we get to hear their ideas too. And so, and through them, we heard ideas like a couple years ago about like Crocs, Elf,
consumer behavior of 15, 16, 17 year olds.
I mean, it's just, really interesting.
Mutually beneficial.
Yes.
Let's finish up with your gratitude. I'm going to share with you
Yes.
the mug that we will send to you in San Francisco, along with the painting I stole from your wall.
Yeah.
But Noriko, I'll
Thank
give
you.
this to you,
Thank
and
you,
I'll
thank
also
you.
ask
Thank you
you
for this.
what you're grateful for.
Yes. Well, I'm really grateful for my family, but in particular, my husband. So, Norman is very busy himself. He used to
Yes.
be a healthcare VC partner and is now the CEO of the Asian American Foundation. So is doing fantastic work. We both are very busy with work. And he has always been 100% supportive. I've never complained about my trips. And, we travel a lot.
Travel a lot.
So it's really, just fantastic when you have a supportive spouse who's also a great dad.
Well, I'm grateful for you. You and I joined management committee the same year in 2016. So we've been on management committee together for 9 years. You've been a great partner. You are an excellent mentor of others. Your investment
try.
results as well. We are benefiting from your long-term investment results. So I'm grateful for you and your leadership and your mentorship and all of that, because you do an excellent job on all of it.
Thank you.
So thank you for being here. Thank you all for joining, and I hope to see you again next time, and have a great day.